This is Jeff Scott, and welcome to my top-down review for the week ending on Sunday, January 18th, 2015. I hope you're all having a great Martin Luther King Day. For those that are off, it's been a nice day to have to take off and not worry about the market. Thought I'd do this afternoon before the futures for tomorrow come out, although you may be aware the futures did trade today. Just to give you some insight, the market actually, the futures traded up, traded down, ended up kind of where they were in the pre-market, with the Dow futures down about 40 points, the S&P down 4 points, the NASDAQ down about 7 points. Oil today, again, for those that were not in the U.S., traded down over $1. I think it was open for a while. And gold was flat, up 30 cents. So we'll see what the futures are for tomorrow. A lot of things going on in the world that's probably driving things, and we'll talk about some of those that might be happening this week. I always put a title, I call this week range bound. We'll see. You can argue that we're range bound, and we bounced off the bottom of the range on Friday. Certainly was a great day to be a bull. But I'm not sure if we're out of the woods or not. We'll talk about that as we go forward. Disclaimer, as always, this is for education purposes only. Any recommendation in the spirit of education and not to be considered investment advice. I'm a doctor, not a broker. I am truly independent. I have had, at one point, I paid for every tool that I use. And trading involves risk, and you alone are solely responsible for any investment decisions that you make. I always start with this slide because I think it's important to understand my philosophy and what drives me. And the first thing to tell here is that I've created one indicator, the bongos, as part of a team. But for the most part, I rely upon the teaching, what I've learned from others. And I'm very proud. I like to read, and I'm proud that I like to read. I've been to many meetings, and I've taken what I've learned, and I've become my own, quote, guru by putting it together. So I pay a lot of respect to O'Neill and his crew of CanSlimmers. Ian Woodward and Ron Brown, who I think took CanSlim to not just an electronic vehicle with HGSI, but also built upon it. Morales and Catcher, who then took the O'Neill discipline, added a lot to it, pocket pivots, Bible gap ups. Alexander Elder and Kerry Lavorne, his partner, a number of great books and trading seminars. Pointing out Morales and Catcher do have a new book coming, I think, in March about short selling. Here's my good buddy, George Lee, a great trader, period. Also a partner on some of my educational programs. He'll be in February doing a program with me. My good friend down here in South Florida, John Person, talking to him as a customer client 3-4 years ago. He told me how great it was down here, and he's a major reason why I moved. And I showed up at his office one day to say hi and thank you, and we've been buddies since. And I've also, as I said, been a client customer of his for a long time. He's written some great books, and I aggressively use some of his indicators and other products. Anna Colin, I like how she looks at price and volume. Van Tharp, the king of position size and money management. And then Dorsey, you might wonder what point and figure charting is doing here, except they do a great job of looking at comparative relative strength. At the end of the day, I think that's kind of how I look at the market. They go beyond stocks and look at currencies and other instruments. But I like what they do. They got an interesting website. His company was just bought by the NASDAQ, so we'll have to see what happens with them. So I'm on a number of boards, and let me just tell you a little secret. If you like trading growth stocks, momentum, and CanSlim, then you want to find the Pelatuma IBD group in Northern California. They have a leader, Lee Tanner, who's outstanding. And I participate via the email and via the board. They do great meetings, and they post the videos from their live meetings. One of the folks on the board, though, last week was my favorite post. And I think this was on Thursday when the comment was, at least the market can only go down 4 days this coming week. And that's true because, as we all know, we're enjoying today off. There's only 4 trading days this week. I plant this here all the time. I have a lot of different products, a lot of different computers. This is a new one today. so I don't have to change resolution on my, as I do on my others. And we'll rely upon Thinkorswim and TradeStation, maybe go into Genesis. Probably will show you why I think maybe we've hit a floor, look at some of the person work. And then HGSI for my analysis, EdgeRater for a lot of the additional analysis. And I'm a big seasonality fan. Pick your program. And much of this you can do on websites, although not nearly as elegant as in the freestanding programs. As always, I ask myself, and you should be asking yourself, where are we in the cyclical pattern? We've been living on this right shoulder for a long time. And every time it looks like we're pulling down, we go down part way with the 5, 7, 8%, and then we jump right back up. And are we doing that again? We'll look at the charts. It certainly feels like it. And it's almost as if the range that we're living in is perhaps the top of this, where we're just getting quick pullbacks, retracements, move down, retracements. But regardless, Friday was a pretty positive day if you were bullish. Market thoughts. Well, this was actually from a couple of weeks ago, and probably shouldn't be here, but let's just talk about this. Low volume sell-off, volume picked up. In case somebody's not listening, let me just change this. 2 weeks ago. All right. And, if you think about it, since the 29th, we've been in a low volume setup. I think sell-off. I think we've now had 4 positive days in the S&P 500 in 2015. Greece woes continue. Well, they do continue. And we got added to it this week with the Swiss decoupling from the euro. As I understand, and Gallardi is our currency expert, certainly not myself, the Swiss have pegged their franc to a certain amount of euros for years. And there's a lot of concern about the euro. It's fallen a lot, but also because of some quantitative easing, which people expect on Thursday, which I'll mention later. So the Swiss unpegged, and they immediately went up 30%. The euro dropped hard. It put FCXM and other Forex brokers and a lot of individual Forex traders in a world of hurt, and led to some strength in the dollar. Today, I saw that the Danes lowered their interest rates to, you pay them to put money away, minus 0.2% or something. And I think what we're seeing is those that are not using the euro have tried to unpeg, because if the euro goes down, they don't want to be taken down with it. The problem is it makes their currency so much stronger, which could hurt people who are buying things in euros, might reduce exports. But it's playing havoc, and I think that it will continue to play havoc, including oil and gold, which in dollar terms will get cheaper, but in euro terms may actually be more expensive. So there'll be a lot of confusing stuff there. The strength found, dividend payers continue strong over this market tumult. Take a look at TLT, long treasuries, REITs, utilities, MLPs, anything that pays dividends look good. Financial managers, not so much. And in fact, Morgan Stanley, Goldman Sachs have sold off. Bank of America also sold off some, or a lot. Speculative biotech depends on what day you ask. For example, Kite, Juno, they all got taken out to the woodshed and killed on Thursday, and they all recovered substantially, although not back to where they were on Friday. If you own those, I own some Kite, it's been a wild run. Chinese stocks, we got some big Chinese numbers coming out this week. They slowed down this week. They have been moving up. And I think we did get the sell-off and profit-taking, which we talked about 2 weeks ago. So remember, this slide is 2 weeks old. As people know, I'm a fan of seasonality. Again, I paid for Magenta fully. I paid for my Magenta data subscription fully. I have no financial involvement with Magenta. Someone on another board accused me. But this is kind of cool stuff because what I've done is this is a calendar function that Magenta Trader has. And I put in, I want to look at both longs and shorts, have to have at least 10 years worth of data. You have to be right 90% of the time. So if you say it's a short, then it had to go down 90%. And you have to get at least a 10% average return. And these are the stocks over the next 3 weeks in advance of to their earnings come out where one would expect a big move. And we're going to talk a little bit about Netflix. And what this tells me is that over the last 10 years, it's been up over the next several days, 90% of the time, with an average return, we'll get more information on this in a second, of 26.6%. And when it dropped, the 1 year it was wrong, it was down less than 1%. These are other stocks, hopefully you can see them. I've tried to come to a resolution that is reasonable, that also have seasonality moves. Now, if I was to click on Netflix, I would bring up a chart. And this is, I'll go into the program because you can see it easier. But this is the key. Netflix has been in a downtrend, slight downtrend. It had a big move on Friday with an upgrade. There must be a broker out there, an analyst who follows seasonality. And this is what a 5 years in yellow and a 10 years in green prediction of what we might, I might be backwards on the 5 and 10 years, but that doesn't matter. They project a big up move over the next several weeks. In fact, Netflix is in a super strong period of time. So I'm going to make some comments probably at the end of what I might be doing to trade this. This is not a slam dunk. I would rather see a stock that's been in an uptrend and then based. This has been in a downtrend and is trading at the top of its downtrend channel. But perhaps it's telling us in this picture that Tuesday earnings will be strong, and the reason for the big move on Friday is the stock's going to get its typical 26% move. As I said here, this is at your own risk. Past performances are not always indicative of future results. Just to remind everybody, kind of give you a status here. We're at a good number. I don't want to have 50 or 40 people in the room because it's overwhelming. The max that I want to have is 30. When you take out George, I, and Chris, and maybe George Roberts, that gets us down to 26. I think I have 23 commitments that have paid already. So 3 to 5 more spots, and then I'm going to shut it down. So if you're interested, please reach out to me, htsi.@gmail.com. A couple things about this week. From a news perspective, at least here, mortgage permits, claims, natural gas and crude, and home sales and leading indicators. We don't have the first of the month employment numbers that are the big movers. Perhaps the most important thing, I think, comes Thursday, and with the expectation that the Eurozone is going to announce some fairly substantial quantitative easing. Some of that easing is likely to diffuse over into the U.S. That has had the effect in the U.S. of keeping interest rates down, boosting the price of bonds, and perhaps has kept us from having a major correction in the market or delayed a major correction. So what will that impact be? On the right, you see some of the major earnings that are coming out. And as I look at this, I see several that matter to me. Halliburton, although I've got my position collared. Delta Airlines are big ones. Here's that Netflix after hours. Smith Micro here. A number, United Healthcare. A lot of big companies coming out with earnings this week. Here's United Rentals. Boy, has that one been hammered. What a great short that one was about $25 ago. So you need to know, here's Starbucks, Skyworks, a big mover of late. You need to know where your stocks are because you don't want to be blindsided. And there's been some pretty substantial moves based upon folks when they miss. And here's Levitt Brothers, where I get this information from. And this I got out of Financial Times. So what I like to do at this point is to first, what do I think the market's going to do this coming week? and where have we come from. So let's look at where we came from. So I put together a spreadsheet, which is a lot of cutting and pasting from EdgeRater and HGSI, and let's take a look at it. First one is what happened last week. So this is looking at, had I gone into the market and bought all these groups at the end of the day on Friday, or using Friday's closing prices, and then sold them all at the end of the day Friday this week. And it gives me a sense, first of all, more red than black tells me weak market. Then I look down here and I see the S&P 500 was down 1.24%. The IBD 50 was down over 2%. That's a bad week for growth stocks. HGS 100, IBD 85 performed a little bit better than the IBD 50, but they were down as well. So the market was down, growth was down. What was working? These were some of my buy picks. Special situations and pullbacks ready to run are all stocks that have been beaten up a lot. For example, here was a marine shipper. We talked about marine shipping last week, and you can see one of my favorites, Horizon, which I've talked about for quite some time, was up 7%. Also, some of the gold stocks had a big move this week. Leaders extended. These will be stocks that had a good run. They were up 1.33. My aggregated buy picks were up 0.73, which is good compared to the S&P 500. So it tells me that my stock picking, I can still rely upon it personally. You rely upon your own. It tells me that our traditional CanSlim HGSI stocks were not doing well, and the market itself had a rough time. If I look at a bunch of different markets and performance over that period of time, you can see the big winner was the VIX, silver and gold, utilities, bonds, and dollar. When you see this picture, you know that stocks, common stocks especially, did not perform well. Hindenburgs. We have not seen another Hindi signal. Last one we had was January 5th. And this really came out at the height of the market turbulence. And you could see that the new highs actually that were starting to move up by then and are back up to 7.5%. The new highs got down to less than 1% in middle of December and got down to 2% on January 2nd before they recovered. Bucketology, again, looking at the S&P 1500, each stock, and then plotting it, how many are above or below the midline in the Bollinger Bands, and how many are in the first to the 10th decile, how many are below and how many are above. What do I see here? I see a relatively bearish looking 64% are below the midline. Why is that important? Because as I think about Bollinger Bands, a stock in an uptrend usually bounces off the top, pulls to the middle, goes back up to the top, higher highs, higher lows. In a downtrend, the stock usually bounces off the lower, into the middle, lower low on the lower, back to the middle, lower lows, lower highs. So this is in the bearish camp. And I look here, I don't see any overabundance of stocks trading below the lower band. Now, the fact that we're at 16% here and 15 here, those that come to Ian's meeting, I think we'll hear that Ian's taken this and refined it, might suggest that we're starting to move back up. Here's where we were one day previously. That was the 16th, it was the 15th. And this is where I start to get excited because I know that when I get 20% of the stocks in the S&P 1500 trading below the lower Bollinger Band, that we're getting ready to bounce. And pretty much throughout the bull market we've been in since 2009, that signal has worked. Except it took a little bit longer to fire after the October swoon. We look at the markets, and you could see kahunas to the downside on Thursday, to the upside on Friday. You can see we've been in chop between green, yellow, red on percent B. This tells you where within the Bollinger Bands the major indices are. And you can see the S&P, the Dow, up here, the Russell, so on and so forth, NASDAQ. So when you see they're red, it means they're at the lower part of the Bollinger Band. When you see them get to negatives, it tells you that the index itself is traded below the Bollinger Band, and that's kind of interesting, and that would have been the IUX. Over here is bandwidth, and what we've learned from Ian is percent B times bandwidth gives us a buy-sell signal, or it's an okay to be buying. and we are in a choppy time, and you could see how bad Thursday was here across the board. We went red, but we came out of that on Friday. I'm not going to spend much time on the setups today, but what I use EdgeRater for is I run against my trading list of about 3,000 stocks that are 2.5 and 150,000 shares. And I look, these are some of George Lee's signals where he looks at stock squeezing and looks for breakouts to the upside or the downside. Code blue and code red, I can duplicate this in HGSI. These are some of the Gil Morales type picks with pocket pivots and other blue signals, kahuna forces from our HGSI world. From a seasonality perspective, this market's been kind of tough. I want to highlight this group here, and you could see that, for example, over the next month, in 12 years of trading, AutoZone's been up every time, average of 5%. So these are some of the stocks that perform well this time of year. Here's Halliburton, up 11 out of 12 for 5%. It's going to be interesting to see if it can actually trade up this month. If you want to see where the big moves are, as I said, the Netflix move, and I couldn't. The problem is that the Magenta time frame and the EdgeRater time frame are different. This is looking at 1 month. I suspect for the Netflix, I need to look at 2 weeks performance or even shorter. But you could see over the next month, you've got some stocks that have big moves. I probably ignore most of these until I see something with a lot of years positive to negative. So, for example, Medivation's been up 10 out of 11 years, 22%. That's a pretty big number. Keep going down. Here's Paraxel, up 11 out of 12 years, 15%. So here's a way you don't have to have Magenta or Best Choice. You can do seasonality using HGSI, as a data source, and then EdgeRater to run the analysis. And HGSI has plenty of data, so I have enough data built here. Okay, so that tells me where I came from. Tough week. Looks like we're in a position we might expect to bounce. I'm going to try and do this on TradeStation. The next thing I like to do is I like to look at my elder indicators, specifically looking at the colors of the bar. Remember that a green price bar means it's okay to be buying. You don't have to buy, but it's okay. You shouldn't be shorting. A red price bar means it's okay to be shorting. You shouldn't be going long. And a blue bar is sort of indeterminate. You can be doing whatever you want. I also look for dots. As you can see here, these red dots here. And these red dots represent a MACD divergence. And when they're on the top of the chart, let's see if I can find some on the bottom. When they're on the top of the chart, it suggests that a pullback is going to happen. And when they're on the bottom of the chart, that it's a convergence and the stock may actually move up. If you want to see why we have a divergence here, we have lower lows here. And this is actually a convergence. I'm not sure if it qualifies much yet because of close, but notice the stock market is trending lower, yet the MACD histogram and the line are not making lower lows. So we may end up, if we continue down, to develop some MACD convergence here. But enough said about that. Blue price bars on the NASDAQ 100 on the daily, red on the weekly. So that could be a retracement in what's now become a downtrend. And I'm going to be nervous about expanding perhaps my long positions in the setting of that red. However, one of the neat things about TradeStation is I could tell you that, let's see, that is this week. And for me, for us to change color to blue, it's got to get to 42.30 in a penny. At that point, the price bar will change. So there's still quite a bit of a move, almost 100 points for us to get out of the downtrend color bar for the NASDAQ. And you notice you had the MACD divergence here, and that led to the sell-off. How about the Dow? Similar picture, MACD divergence, now resolved to the downside with a red bar on the weekly, blue on the daily. Perhaps this is the start of something good, yet I'm still concerned about the weekly bar. I can look at the Russell. So the Russell had a, I think this is today. Let's see. Because it's futures, they did trade today. So the Russell is a blue bar, blue on the weekly. It still has some MACD divergence here. So a little bit better feeling on the small stocks. Semiconductors, blue and red, so the same story. Weekly to the downside, perhaps a retracement here. S&P 500, blue and red. So how do I put all that together? Simple. Until proven otherwise, we're in a downtrend, and we have a counter trend rally in place, and it's going to have to move up quite a bit for me to believe that we've reversed and gone back to an uptrend. And perhaps we're not really in an uptrend until we take out the prior highs. So counter trend rally, downside signal on the weekly, but moving up on the daily. Why do I think we might be at a stopping place for this fallback? Turn this off. So these are the John Person indicator set, and these are, I believe, his monthly pivots. And typically the stocks will bounce off support, and over time the monthly pivots have been a both resistance here and here, as well as support. Here's back in August. Nothing worked in October, sort of held us here in early December, and we pulled back on Wednesday and Thursday, or Tuesday and Wednesday and Thursday last week to support and bounced. And then on Friday, we traded a little bit below support and closed up on the day with a bullish engulfing pattern. So that may tell me that we are sort of range bound here, and perhaps I don't know why I wanted vertical on this. Not what I wanted, so let me kill that. I get my horizontals, my verticals. I think I did it again. Horizontal, Jeffrey. So are we in a trading range in here? And frankly, until proven otherwise, I think we're in a trading range. And, you know, a breakdown below here would obviously be ominous, and then 1800 or another 175 points becomes in play. And obviously a breakout above this, which I don't think anybody's expecting anytime soon, would be extremely bullish. So based upon monthly pivot support, I'd like to believe that we're trading close to support in a trading range market. A quick aside, I know some of you have been using the TradeStation earnings EPS date, and I just put a new one in, so it's not populated. It's populating slowly. They changed some of the code, so if you use this and yours isn't working anymore, you need to go to the TradeStation forum, search for the guru, go to the first post, and download his new file. All right, kill this. I assume we're recording, and let's go into HGSI. All right, I don't have to resize everything because this computer is the right size. So let's start off by looking at the market. I spent a lot of time on the market because I'm a firm believer that how the market does is more indicative of how I'm going to do tomorrow than how I stock pick, and I'm a good stock picker. So here's Major Market Plus looking at 1-day performance, a little bit of 5-day performance, and just a little bit of 3-week performance. As we said before, stocks underperforming, gold and silver, utilities, bonds up at the top. So nothing new. If you look at 5 days, volatility up 19%, NASDAQ down 1.5%, Dow down 1.3%, S&P down 1.2%. We already know that. Russell 2000 down 0.8%. If we look at just Friday, you can see differences. You could see Russell was up nearly 2%. The NASDAQ was up 1.4%. So it'll be interesting to see if Friday is a reversal or a one-day wonder. Let's take a look at some of these. And we'll start with my webinar view, looking for any new Eurekas and Phoenixes. You can see the bongos on the S&P are firmly in the red. Nothing new here, so let's just get out of this view. And by the way, I'm working on a new add-on to give to George, maybe tonight, if not later in the week, that will have my new views and stuff so you can follow with me. This is a simple view. It's got my Hindenburg up here, which you can see there hasn't been one fired in HGSI for several weeks. Lower left, upper right, we're in an uptrend. If we look at weekly, for example, in the S&P, over and over, we talk about how strong this market has been. If we take this back even to 2009, we haven't had a major correction since 2011. We had a little one this October, but for the most part, on the weekly, we have respected the 17 weekly moving average. Let's go back to the daily. So in a uptrend, and again, are we in a trading range here? We'll have to see. But this is the kind of day which we see at reversals. Here was the reversal in December. Here was a reversal in August. Here was a reversal in April. So we had a big green day. Now the problem was, we said this 2 weeks ago, and we had a nice reversal looking day, and we topped out the next day and we sold off again. So I think it's okay to be cautious. As I said before, the market looks like it's rolled over, and therefore these may be counter-trend retracements and less likely to go on to new highs. If I look at the Dow Jones Industrial, again, this was my top. And are we in a trading range here? And are we going to bounce around there? We'll see. But again, we had a big up bar on Friday. And I want to point out here, on good volume, although it was options expiration, so that sort of helps the volume. If I look at the NASDAQ, same old, same old. Above the 200, less than the 50, bullish looking day on Friday on average volume. Here's our top. We are ways away, obviously, from that top. The Russell 2000 pulled all the way down to 200, closed nearly at the where it opened on Thursday, not quite. Still a long ways from its triple top that we had in the past, or at least a double top. We look at let's look at the dollar. I think the dollar will have a lot of upward pressure on it. Now, that's a shooting star on Friday on huge volume, and one might expect that the dollar will sell off because a shooting star is often a topping signal, and we've had a pretty dramatic rise in the dollar this year. However, with quantitative easing of the euro and what's going on with the various currencies, do you want to put your money in the bank in Denmark at negative rates, in Germany at negative rates, or do you want to buy dollars and have your money grow in the U.S.? I think you want to be in the U.S. That propels the dollar higher. So At some point, the dollar is going to come down. As I said, Gallardi is the Forex expert. Right now, the dollar continues in a major uptrend. Now, quantifying what a major uptrend is, May lows to the close on Friday, it's a 16% move in the dollar. That's a pretty big move in the dollar. Looking at UPP as my surrogate. Excellent. Now let's look at silver and gold. Gold, I'm getting excited here. I bought some gold off of this bounce here, and we've now gotten above the 200-day moving average. I mean, that's pretty impressive, and we'll see if that holds and continues to go higher. But gold looks interesting on big volume. Dollar races up because of what's going on in the EU. The gold may go up in terms of euro dollars, but may go down in terms of US dollars because the euro dollars will be worth that much less. So it'll cost more to buy the same gold. Silver, not quite as impressive, but impressive as well. Will it get above the 200 as well? We'll have to see. And then volatility, sort of had a sandwich here, but it closed down pretty strong on Friday, and we'll see if it comes back down. Falling VIX, you want to be buying stocks. A rising VIX, you want to be out of stocks or selling stocks. All right, that takes care of my analysis on the market. So again, let me just summarize. I feel that we have a retracement up in a market that looks to me like it still wants to go further lower. I think the quantitative easing picture that we live in the States and concern about the next QE, as well as the imminent QE in the EU, may provide additional support for this market and continue to delay or prevent major corrections. Perhaps the EU action may force some moves by our Fed so that our currency does not become so strong that it kills our exports and those multinational corporations based in the US. If we look at industry groups, we have 177, and if I rank them by two-day force, you could see that we end up with, that's not the one I want to use. $80 of them, which is a big number, are moving up. If I look at two-day force to the downside, we had a really strong day on Friday, so you wouldn't expect anything. This is the reason why, and this will be included in my add-on, I have included a 5-day force. Now, there is no trading validity or reason that I'm aware of why you should put a 5-day force on your charts. It has no meaning. However, my concern with the 2-day force as a ranking tool, remember it's price times minus today's price minus yesterday's price times volume plotted, and you take a 2-day or 13-day exponential moving average, and that's the force index. The problem is it's very fast. And, do I believe we're out of the woods? No. Therefore, I'm more interested in stocks that have been, or groups that have been moving to the downside in over a little bit longer period of time than 2 days. That's why I have the 5-day. So on the long side, there's not going to be as many stocks in the 5-day force because most of these stocks have been troubled and they had a big move up in the last 2 days. So these have been behaving longer, but you'll find there's a lot of overlap between the 5-day force and the 2-day force on the up, especially in the leading groups. So let's look at them very quickly. Biotech, my favorite. So let's look at the ones that are top ranked. Gilead. Let's go into my favorite view for the stocks, which would be my web view. I'm going to do this once for the newbies. I start off with the Hindenburg. Since we don't have one, we're going to make it small. We don't really care about that. I have bongos, weekly and daily. The bongos are a momentum indicator. When the weekly is red, the stock is in a downtrend. When the weekly is red and the daily goes to green, that suggests a retracement in a downtrend. The middle color bar here is accumulation distribution. Dark green is A, dark red is D, yellow is C, and the lighter color green is B, and the lighter color pink is D. So I want to know what my stock is from accumulation distribution, and is it getting better or is it getting worse? Here is my force index, and like the bongo, when the longer term, which is on top 13, is red, it suggests we're in a downtrend, and when the shorter one goes green, it suggests we're in a retracement. So then I get the high jump here with red candle highs and green candle lows. Viable gap ups, which we don't have one, squeeze, mobile breakouts. These red dots are PSAR, and these would be sell, and green would be long. Here is the index of the industry. This here are pocket pivots. Blue is positive, red is negative to the downside. We have on balance volume with a 10-day exponential moving average. And then we have our bar of regular volume and the kahunas. On moving averages, 8-day in the magenta is exponential. 17, 50, and 200 are simple. So I like stocks in an uptrend. I like to see the stock above the 8, above the 17, above the 50, and above the 200. I like those moving averages in that order. Anything else is some type of an aberration and suggests that the stock's not in a great uptrend. So Gilead, I've been a big fan of Gilead for some time. I've been a big proponent. I was pushing it 18 months ago. And Gilead this year has had a great run. It stalled out because of some controversy over recent pricing at the high end. It's had a nice move off of its lows down here up to where we're at today. And in fact, I don't know if he's still holding it, but I got my brother-in-law into the stock after it pulled back. It's had a 16.8% recovery in the last 16 trading days. But let's talk about where it's going or where it might be going. I'm a big fan of this company. I think they've done a great deal, and their products are outstanding. No idea what that was supposed to be. Erase it all. Excellent. We have a stock that's in a long-term uptrend, pull back to the 200. I like to see it get above the 50 before I get too excited. A lot of red up here. I'm watching this. I think it's had a big move, and until it breaks above the 50, I'm probably not going to play it. It's got great earnings per share growth, which I love. It trades at a multiple of 16.59, and it's a leader under some pressure. Novavax, small stock. It's got a market cap of $1.6 billion, so it means Ghilardi could buy the whole company. Nice move here. We had kahunas the last couple of days, a big move in on-balance volume. We had a mobile breakout from a squeeze, as well as a viable gap up on Thursday, which was a bad day for the market. So here's a stock that had a big move up on a horrible day. Let's look at it on a weekly basis. And, it's getting back towards recent highs from early in 2014. Doesn't make any money. It's an early stage company. I like the chart a lot. I like the on-balance volume on the weekly. And here's one that I would be putting into my buy list. So if I right-click in the chart, I can go down here, left-click, buy watch, hit OK, and that'll Celldex, another small biotech. I think it's giving us also some interesting signals. On a weekly, it had ran up a lot in 2013, got close to 40, pulled way back here down to 13 or 14. And I guess you could say it's had a nice bottom, and it's breaking out. Global breakout from a squeeze, everything turning green, pocket pivots and kahunas. On Friday, I'll put it into my buy list, but Dex. Amgen looks a lot like Gilead. Maybe this is the picture of big biotech. Had a big day on Friday with the kahuna. Its on-balance volume is below its average. I'm going to pass on this one right now, but if it can get above the 50 and show some strength, Amgen has been a leader. Kite, I mentioned this one earlier. Show you back here in TradeStation. And let me go back to some of John's indicators. I don't want to use that one now. Okay. And maybe never mind. I'll use this. This is a daily chart of Kite. And this is in one of, use this for futures, but it should work for stocks. Okay, some of these are going to be used on futures. But what I wanted to show you, these are person buy signals. And this is when I got into the stock because it broke out, it was been basing, and it broke out here in the low 50s. It ran up here, big pullback on Thursday, recovery on Friday. I'm still long. What I did up here is I had sold calls, which went down in value as a stock drop, so that abrogated some of my loss. I'm still in a good position. This is a stock I like, but I got into it because it broke through resistance here, which would have been a monthly resistance line, pivot resistance, and it had a buy signal coming off of a base. So I bought that based upon the real-time charts, but you could see here, nice uptrend, and really the best buy point probably was in somewhere in this area here, because I think when I got into the stock, there were a lot of opportunities. Kahuna's here, Kahuna's back here. It's just been a big mover. I still like it, but it's expensive. Another big cap biotech, mobile breakup from a squeeze on Biogen IDEC. Right now, I like the little guys. I think the big guys just going sideways for a long time. Biotech still strong. Back. Expiration production. Not sure how much of this is dead cat bounce, but I own a couple of these of late, and I made money on them, so that makes me happy. Oil continues to fall. It wouldn't surprise me to see these guys bouncing first as oil tries to find a bottom. Now, if you're a shorting kind of a guy, you want to short these stocks when they retrace back up to the 50. So we might just be setting up for a more shorting opportunity. On the other hand, you've got probably 20%, 25% run from where we are back up to the 50. We had a PSAR reversible. We're starting to see some green up above. A lot of volume coming in here at the bottom. Earnings per share estimates have been reduced, and you can see they're not growing as much. And this is a pattern. Now, over a weekly chart, oil, big trouble. Now, is that a stopping candle on huge volume, and has the world changed? I don't know. This is a bingo, which is sort of the baby out with the bathwater time. Been a tough place to live. As I said, I got a couple positions in here. Pioneer Natural Resources looks a lot nicer. A couple pocket pivots. A kahuna, I'd like to see it get above the 50. Expensive stock. It too has negative growth coming in. EOG, higher lows, still in a downtrend. Continental Resources, boy, these guys blew it. Apparently, they had hedges on oil at about $100 a barrel, and they sold the hedges right before the market rolled over. Ouch. Got to get above that 50. Did have a kahuna, some recent pocket pivots, mobile breakouts. So when you look at these, you see a lot of similar patterns. Pull back low, trying to make a move here. All stocks in deep downtrends. Two that I own, and probably one I like, is FANG, um, this could just be another bear flag and on another way down, but it had a pocket pivot on Friday, good volume on Friday, earnings per share growth still growing, does trade at a big PE of 29, but this stock has had a nice move off of its bottom. And then I've got some of this, which I probably shouldn't be having because it looks like everybody else. It's been pretty much clobbered. But is this a lower low? And is this a stock that's reversing? Don't know. I think you got to be very careful with the oil exploration and planning stocks. If oil takes another leg down, these guys are going to go with it. Speaking of leg down, here's Schlumberger. Sometimes you just get lucky. I had a 80, 90 bull call spread on this stock because I thought it was actually recovering earlier. And it looked like it was expiring out of the money, and then all of a sudden it moved up almost 5 points and got in the money, so I didn't lose any money on my spread. At least it covered most of my cost. Like the oil plays in a downtrend, bingos all over, and these bingos were not the end of the downfall. We had a big kahuna and a pocket pivot on Friday, a big move up, lots of green coming in. They announced layoffs. Is this a bottom? It was a bottom of last week. It remains to be seen, but Schlumberger is a great asset, and if this is just a short-term aberration in the market, this is the premium story in oil services. Now, we'll probably learn a lot more this week as Halliburton reports. It did not get the same degree of a move on Friday. That was up 4.8%, $1.80, so it had a nice move as well. It just doesn't look as impressive as Schlumberger. Baker Hughes, an acquisition candidate by Halliburton, move similar. Here's Weatherford. These things have been clobbered. Some of them, like Weatherford, I thought some pay a dividend, and be careful about buying any of these stocks based upon a dividend because as they have less revenue and earnings, their dividends likely to be reduced. And the percentage that you see is today's stock price and last time's dividends, so they may end up being not what you expect. So I would put group 2 and group 3 in the be careful category because if this market, if the oil continues down, these things are not going to stay up. Semiconductors, Intel, this would be sort of the bull case for the market. Crappy earnings. Looked like it was going to pull the market down. And what did Intel do? Intel opened below the prior close, just traded down to right above the PSER reversal dot, and closed up on the day, up 26 cents with a pocket pivot. You can see the volume here. Considering the fact that they laid a turd when it came to its earnings, and they closed up on the day, was it because the tape was so strong? Or was part of the reason the tape was so strong was because when the earnings were digested, people were less disappointed in Intel? It'd be interesting to see. Skyworks, one of my favorite stocks, earnings this week, be careful. Looks like a great time to buy if it wasn't for the earnings. You had a little bit of a retracement. Bullish engulfing candle on Friday, PSAR reversal, mobile breakout from the squeeze, a pocket pivot, and a kahuna. The problem is earnings are due 1/22. And by the way, another hand for George Roberts because he put earnings and PE and industry group right in front of my face so I don't have to be going to MarketSmith or flipping down here to check those things out. Tessera, what a neat move. 50 is clearly support. Big move off the 50 on Friday with a mobile breakout. Gotta love the picture of strength of the dollar. What a surprise. Big kahuna. Looks pretty good too. Let's see what it looks like on a weekly chart. Nice little pullback. This one looks good. Big earnings expectations, growth this quarter, then slowing down. Word for the wise in HGSI, believe the first one. The second one goes through many estimates. I don't make a lot of decisions on the following quarter anymore. Too often I find that it's premature in many ways and that it does undergo lots of revisions. So that was semiconductors. Let's go back. Precious metals. We've looked at gold and silver were strong. You know, I got killed on these over the last couple of years. I've been out of gold for a while. I'm back in gold. Gold Core, highest ranking with the Force. Remember, Force is price and volume. This does an average volume of 10.5 million shares per day. That's why it's at the top. Running up against resistance on the 200. This will be a big story if it can get across. Notice how on balance volume is now trading above its moving average and crossed over here and has pretty much led the rise in the stock. American Barrick Gold broke above the 50. The stock has just been in a horrible downtrend. Newmont, like Gold Core, is going to get close to its 200-day soon. Everything is green. On these stocks, all look interesting. AEM, I like a lot, broke above the 200. I think we've talked about it several times. And a couple of the little ones that I'm in, look at Silver Wheaton. Silver Wheaton looks like AEM breaking above the 200. So I think there's a lot of interest in these stocks. You'll have to pick which one you want. Here's Goldfields. This was probably, I thought, the best chart of the bunch, but it's a little tiddler comparatively. Sort of a spinning top day here after a inverted hammer, so it'll be interesting to see what happens. Of course, all these stocks will be whipsawed by what gold does, and silver, and the dollar. Integrated oils. So some of the big boys, I'm only going to look at one or two, but the patterns are similar to the E&Ps. Will this be shorting opportunities as it gets above the 200, or is it different this time and it's going to be in it's going to turn around? Stock's been in a downtrend forever. Right now it's a counter trend rally. These don't go as far in my mind. Exxon, similar picture. Chevron, similar picture. Suncor, similar picture. Petrobras, similar but worse picture. At some point, these things will be buys again. In my mind, I'm not touching these until they break above the 50-day moving average and perhaps at least signal that they're resuming an uptrend, or at least some element of a rally. Midstream, oil and gas, these are dividend plays, and these had sold off and started to recover before some of the other energy plays. And you could see still in an uptrend. This is Kinder Morgan. There's a lot of M&A stuff with this guy. Moved up off its 50, has earnings, but most importantly, it has a 4.2% dividend. So these, like REITs, are getting some traction because of the dividends. Enterprise 4.2, Williams Company 5.4, Plains All American 5.3, Ross Group 8.7. Now, these are like, someone told me they're like putting a meter on all the energy that's transported in pipelines. They may be less sensitive to the price of the commodity, but you'd have to believe that their rates will become under pressure if either the volume reduces or the profitability on the producers goes down. But these are a dividend play, and I would say, be aware dividends can be at risk. Banks. Man, banks are in a world of hurt. These are some of the regional banks, and two of them up there, or at least one up there, yeah, two of them are some of the Indian banks that are on fire. SunTrust bouncing here, had a nice kind of a morning star formation, I guess, or at least a gap up on Friday in a downtrend. Is this the end of a fall and is it going to go up? Who knows? Clearly there was strength. Here's a Brazilian bank or a Spanish bank. Here's one of the ones I like a lot. This is an Indian bank, and I think we talked about this a couple weeks ago. India is on fire. India had a big move this past week, And India is probably one of those countries that really benefits from cheap oil. Now, you can contrast these banks with the banks that are not working. Bank of America. You see the bingos, the big fallback, the breaking through all kinds of support. How about JP Morgan? Looks just like Bank of America. How about Goldman Sachs? Not as bad. They've got earnings coming out in April, so they must have earnings coming out in the next couple of days, unless they came out last week. Sort of a long-legged doji here on the 200. So if this went up from here, this might be a good buy point. How about Morgan Stanley? They bounced on Friday as well. So the big banks don't look so good. However, that Indian bank looks really attractive. Why are the big banks hurting? Because interest rates are so low. Specialty pharma. We'll look at a couple of these. Depomid, I don't know much about. Obviously, they've been in a big move. We'll see it shortly. Whoops. Big move up on Friday. Had a bunch of pocket pivots and kahunas leading to this. Not an expensive stock. This is one you want to check the news on. Alkermes, not much in the way of earnings per share growth, but a nice up move nonetheless. Horizon, I mean, I've talked about this forever. Sideways base, September, October, November, December, broke out here, broke out again on Friday. On-balance volume's up, kahunas, lots of pocket pivots. This is probably one of the nicer looking charts that we've seen. And here's a weekly, pull back to that 50 weekly, and out of a squeeze, broke out. I like Horizon. What I really like about Horizon is they got some big earnings per share expectations coming in the next couple of quarters. The negative is they had a bad miss here, and that just killed the stock back in the past. So Shire is buying mental block. Who's Shire buying? NPS Pharmaceuticals. Valiant is another nice chart pattern. Short term, it's in a nice uptrend. Let's look at this at a weekly chart. What a beautiful rounded bottom. So you could, if you wanted to give me a little bit of leeway, I might say cup, handle, breakout. Well, we'll break out from a squeeze here on the weekly. And Valiant lost out to activists on the Allergan purchase, and once that happened, it went into an uptrend, one of my larger holdings. Go Valiant. The other one here that's interesting is this Mallinckrodt, and only point this out because it's got great earnings per share growth, much bigger than its multiple. In fact, if I go and I look at MarketSmith and I put in MNK, multiple 22, 2015, expecting 660, which is 31% growth. So that would be 20, 120, so in the $140 range if it meets its tail numbers and doesn't change its PE. So this is one I like, a lot of earnings momentum. And if you used to own Questcor, it's the same drug. All right. And then the next group down, just so we go to 10, is the REITs. And I mentioned REITs look good. And this is kind of like the MLPs. This is one that I own, HCN. I also own MPW. And why do I own these guys? Well, beautiful uptrend. And great earnings per share growth got to have earnings to pay a dividend or else you got to take more debt. 3.8% dividend. The MPW, medical properties, is here. 5.5%. This was a secondary offering that occurred earlier in the week. I have these as sort of my hedge. You might want to just play TLT, long treasuries. And let's just tighten this up so you get the real effect. They sold off when quantitative easing came back in. And boy, oh boy, are they in a bull run now. Big move on treasuries. Now, if you think they're done, you can go with TBT. And this is what happens if you were short treasuries. So REITs to me are a lot like bonds. They pay a dividend, and they are sort of for me, one of my ways of dealing with the volatility in the market. So if you look at this, you see biotech, which has been strong for a long time, as have semis. You see some energy stocks, some mining stocks, more energy stocks, and then the dividend players. Now, what else would I do as I build my list up? A couple of different things. One thing that I've been doing, this will be in my add-on, is I'm a big fan of volume. This is something I put together for George Lee. So here's all securities. Let's see what stocks were up 5 times. I want to go with a tight filter that eliminates a lot of junk, like Barclays and unknown symbols. And I end up with 3 stocks that had 5 times volume on Friday. So if I look at these, this is how sometimes where I find my candidates. So this is Terraform Power. It's an IPO, renewable energy, so I'm probably not interested. Let's just gone sideways, bouncing off the 50, mobile breakout squeeze, Bible gap up, pocket pivot and a kahuna. And the reason why this one showed up was because they had 6 million shares on Friday, and their average daily volume is 630,000. So a huge volume day might be something to look at. And then you have the Depomed and the Novavax that I pointed out before. What I have learned, and actually let's look at Novavax. Well, you could say, Jeff, this is too late already. You're right. But you could have bought this stock at or below the closing price on Thursday. And why would you have been alerted? Look at the volume. So on Wednesday, the volume was 5.7 million. On Tuesday, 4. So you have 5 million shares. And then on Thursday, you had 15 million shares. Now, if that you had run this 3x or 5x, you would have seen that you had a high volume day, a 3x volume day. That would have alerted you and said, maybe there's something here, and perhaps you would have put a buy stop in. And then on Friday, you had your, I'm looking down here, by the way, 40 million share day. So I have found over the last many years that often some of these big moves up or down are signaled by just massive volume days. So this is Depomed, average 905,000. She had 6 million on Friday. Nothing on Thursday, so no signal there. Let me just go back to Kite and see if Kite had any volume signals. Well, you started seeing volume coming here with the kahuna. And you could argue, in fact, as you look at the volume, 283,000, 254, 280, 442, 1.5, 1.6, 3.2. So by looking for aberrant volume, you can often find stocks as they're starting their move, not just when the move is finished. What else did I want to show you today? let's see. One of my other favorite scans is this one here. So Wilder's PSAR is not something that I use as a trading system. Some people will use it, and maybe that's why this signal works for me. And the signal is when you cross the price, as it did here, it went from a red above price to a buy signal when this becomes your stop. So there is a trading system where you buy when you reverse color to green and you sell when you reverse to red. That's not how I use it. I'm looking for stocks that are about to break out. So if I can find a stock like the Travelers that's in an uptrend. So is this stock in an uptrend? Pretty obvious on the weekly it's in an uptrend, okay? That have started to go sideways. And one of the best evidence that the stock is going sideways is it's squeezing. Now, it had a kahuna, but I want to buy this stock when it breaks out. And I want to buy it not end of day after a huge move. I want to put a buy stop in. And this is why I love this signal. So let's open up the price information. Travelers closed at the high of the day on Friday at 106.69. The 50-day moving average is at 104.48. So let me actually write these down today. So close $106.69. The 50-day moving average is 104.48, and the low of the day was 104.17. And the PSAR dot is, let's find it here, is at 107.25. So here's how I play this. Where would I want to put my stop? If my idea is I'm buying this because it pulled back to the 50, it's in an uptrend, and it breaks out, then if it goes back below the 50, then I don't want to be in the stock. So I could set my stop right at the 50. Now I probably would go back here and say, this looks like the best support. So on this day, the low of this day was 102.99. So my stop is 102.99. My buy is going to be if the stock takes out that red dot. So the red dot, we decided the PSAR is at 107.25. So I'm going to say, I'm going to put a buy stop at 107.30. So this is my favorite kind of trade because I could go on a plane tomorrow. And I could have put my order in an Ameritrade that says, if Travelers trades to 107, whatever I said I do, in a quarter, or 107.22, whatever I want to use, 107.30, I want to buy the stock. And once I get into the stock up here, so once I get into the stock here, I'm going to set a stop down here. So my stop is set at 102.90. I'm buying at 107. So I've got $4.40 risk. So I have about 4%, 4 to 5% downside. And what's beautiful about this, if the market is bad tomorrow, then the stock's going to go down. And I never bought it. If the market is strong tomorrow, it could gap up here, and I never get the stock. But what's more likely is going to happen is the stock will trade if it's a strong market, through my stop order, and I get in, and immediately placing a stop that protects my downside. Now, if I subscribe to the put 2% of my portfolio at risk in every trade, and let's say I have a $100,000 portfolio, that means I can risk $2,000 on this trade, and I'm putting about $4, did I decide? $4.40 at risk per share. Then I can buy 500 shares of this and put that into my order and be going on and having a life and not sitting by my computer and taking the trade tomorrow. So I'm looking for stocks where a breakout is imminent, that I can define where that breakout occurs mathematically, and where I have a stop that's set mechanically at looking at, look back here was support of where we should see worst case support. That's a great trade if the market and if the stock trades up. Now, contrast that with Depot. This one, where are you going to put your stop? I mean, you're going to buy it here at the high of the day if it opens up at 2024, 2025. Is your stop here? 10% away? Is your stop here? Do we not expect the stock to go down a little bit, even if it's going to go back up eventually? I have a hard time buying this because I don't know where to place my stops in a safe way. So I'd much rather buy the stock when it breaks out or before it breaks out rather than go chase a stock that's on the run up. At this point, I guess I'm getting tired. You're probably getting tired of hearing me. Let me show you the stocks that I was interested as potential buys for this week, and then we'll say goodbye. Everything on my buy list is predicated by it really matters what the market does. And if the market doesn't move in the direction the market opens down, I'm not buying any of these. So I'm going to go through these very quickly and make some comments. And this is way too many stocks. How did I get this many in my buy watch? It's not what I thought I had. All right. Let me make this daily. Let me get some more information on the chart. Horizon, enough said. I like the breakout. I'm already in it. High Crush Partners. This made my special situations last week. It's one of the frackers. If oil has bottomed, this looks like it's bottoming as well. It's had a sell-off from 70 down to 35. This is a high-risk play. Pays a 7.2% dividend. It's in a downtrend, high risk. It's on my watch list. I'd like to see it get above the 50 and hold, and I might be more interested. Medivation, this is a seasonal strong stock. We talked about it in the beginning. Lower left, upper right. Looks like it's breaking out above the 50. This is a nice place to be looking at a stock. Universal Holdings, basing, breaking out with kahunas on Friday. Everything is green. Gilead, we already talked about. Mallinckrodt, we talked about. Celgene, another one of my favorite biotechs. Looked like it was breaking out, had a tough day on Thursday and did very well on Friday. Here's its growth rate and EPS. The nice thing about Celgene is they pre-announced last week and it was a positive number, except perhaps foretelling what we're going to hear from everybody else. They're having issues with foreign exchange as the price of the dollar is getting so high. At Federated National Holding, don't know anything about the company, don't necessarily want to buy it. Teeny weeny dividend, pull back to major support, and looks like it wants to break out here, mobile breakout from a squeeze. Novavax, we looked at already, high volume breakout. ANIP, I've been watching this one. This one is sort of my big run up, go sideways to the 50 and take off. This one plays to the same way I worked on the Travelers, where if it takes out this red PSAR dot, it's breaking out. And I have nice support right underneath that 50 for this whole period of time. So I can get into this stock with modest risk And this is one I'm looking at if it breaks out. Here is another REIT. I don't think this one pays a big dividend. It does not, but a nice lower left, upper right breaking out. Here's Acorn, another biotech stock. It's kind of loosey-goosey here. It had a nice run up earlier going sideways. I just get the feeling this thing is taken off again. Look at this earnings per share growth coming into the stock. Valiant, we already looked at. CubeSmart is another REIT. What a move it's in right now. I guess as we 2.6% yield, as we all move to smaller houses, we need places to store, and they sell storage. Hudson Pacific, another REIT. HCN, another REIT. You notice the pattern. Right now, REITs are looking good. Omega Healthcare Investors, another REIT that buys medical real estate. I think I talked about Clovis last week as a biotech that I wanted to get into last week, and I did. And it had a nice move, didn't really fall back much on Thursday. They've got a nice portfolio of oncology products coming to market. Here's a cheap semiconductor stock that I think is breaking out of a wedge here. Mobile breakout from a squeeze. Everything is green. It's a cheap stock, and that might be a negative for many people. Skyworks, I mentioned, earnings coming out. Ambac Financial, don't really understand them. They play games with mortgage securities and derivatives. So that might be scary. And they don't pay much of a dividend, which I don't understand either. And they've been really beaten up. This was an IPO, but they're breaking out above their 200-day there. Industry is strong. A pocket pivot and a kahuna, that makes my radar. I'm interested. I got to do some research. AmerisourceBergen in IBD for Tuesday morning, there's a profile on drug distributors. They are the winners of healthcare reform. I've sold a business to Amerisource, two of them to Amerisource and one to Cardinal Health. There's three, the third one's McKesson. They make a little bit on every transaction, and Obamacare will cause more transactions. They all got interesting business models. They all have low margins, and they all are just machines. I love all three of them. Amerisource, nice base, mobile breakout from the squeeze. Here's my PSAR dot. I might be looking at how I might trade Amerisource. American Axle, this was an old holding of mine that I'm out of, breaking out to multi-month highs here. Everything is green. Clearly a leader, probably too far gone. Celdex. Celdex was a darling of healthcare last year. I think we may have looked at this already, maybe, or it looks just like one of the others we looked at. And I love this pattern. I love the pullback. Not if I was long, I wouldn't love the pullback. I love the pullback down to support here and breaking out. And this is after it tested and failed at the 200, got above it here, and tested and tested. I think the stock's got great support at that 50. Mobile breakout from a squeeze. Looks very interesting here. Avgo put in the same world as Skyworks. It too has earnings, I think, coming out. They've annihilated the earnings over the last couple of times. Look at this earnings per share growth versus its multiple. This has been a big winner. Watch the earnings date. This U.S. Silica, just like High Crush, another fracking story. You know, is this putting in a bottom? Three kahunas and a pocket pivot, a mobile breakout from a squeeze, and historically pays a dividend, which is 1.8%. Be interesting to see, but just something along with the oil services and the producers. Here's another REIT. Airlines. I own some Delta. I sold my Hawaiian, or I took profits on my Hawaiian, and then I bought some more calls with some of my profits. They've been strong. They've been winners of falling oil. They perhaps are at risk with rising oil, but oil's still really cheap compared to where it's been in the past. United has great earnings per share coming in. I would hold off on airlines until Delta reports, but I think they report before the morning tomorrow. FedEx. What a beautiful chart, and what a great time perhaps to buy. Big uptrend, pull back to the 50, coming out of a mobile breakout from a squeeze, pocket pivots, and a kahuna. Makes money. What a great franchise. I'm a big fan of Fred and FedEx small dividend. On assignment, I don't know why I put this one in here. Good earnings per share growth. sort of squeezing, or not squeezing yet, but looks like it's going to squeeze down here. Good support on that 50, which is uptrending, breaking through the 200, right below the PSAR. Netflix, which we're going to talk about in greater detail, so I'm going to skip it. Insys is a healthcare that broke out of this ascending triangle. Like the story, it's got some big earnings per share coming in this year. Did that already fall off? I've been watching this one for a while. Diamond Rock, another REIT. Centene, this is one of the healthcare providers that we've been talking about. Looks like a good buy point setting up here. It's been basing, broke out on Friday. Everything is green, and they're one of the winners in Obamacare. They provide a lot of Medicaid and Medicare services. HealthNet, the chart looks the same. Don't know as much about them. They provide managed healthcare services, and they're another insurer, and they do some government work as well. Another of the self-storage, I don't care what the name of the self-storage, they all look the same. Big move up, 3.2% dividend, REITs are strong. Southwest pulled back, nice earnings per share, green candle low. If I go into airlines, this one's got great earnings, and buying it on pullback is always nice. Cruise lines. Now, I thought this thing had too much of a run-up and was too expensive, but it's got great earnings per share growth. And Norwegian looks good as well. They pay 1.4%. Here's the other drug distributor, McKesson. Again, below the red dot, but to me, setting up nicely. Another storage company, Public Storage, another REIT. Don't know much about Envestnet. I think they provide data and information to brokers. Sideways play. This made it because Kahuna, mobile breakout from a squeeze, everything turning green, they make money. Truckers have sold off. I liked Swift as far as earnings per share growth. The group's been strong, but a lot of the truckers seem to be selling off. Here's that Indian bank. What's not to love? Abaxis, they make med tech, they make blood analysis gear. Uptrend, pull back to the 50s, sideways, mobile breakout from a squeeze. Pocket Pivot and Kahuna, everything turning green. They make money with expanding earnings. Kite Realty, here's just another of the great looking REITs. I think they pay a nice dividend. They pay 3.4%. REITs, one of these days they won't work, but they're working right now. North Star Reality Finance, I put this in my category of high risk, special reward. They're another one of these companies that are playing with strange derivatives in real estate. And they also own properties. They pay an 8.6% dividend. And they had a PSAR breakout on Friday, mobile breakout from the squeeze. Kahuna, Pocket Pivot, mostly green up there, and some good earnings coming in. First Potomac Realty, another REIT, pays 4.6, broke above the 200, so it's less extended than the others. Here's Schlumberger, which we looked at, big move on Friday. Geo Group, another REIT. Here's Delta pulling back. It's got earnings coming. They were another REIT. And here's an MLP going sideways, and it pays a 5.7% dividend. Here's that Southwestern Energy. We looked at this before oil exploration. And then Catalent, what do they do? Another medical device company. I like the setup here. We're sort of at a nice triangle here, or wedge, and in a squeeze. And if this breaks out here, I might be interested. It makes money. It's got rising earnings. It's an IPO. So that was the stocks that I wanted to run through. Let's look at Netflix. So here's the problem, or the challenge, or the opportunity, or whatever you want to call it. Let me start my magenta up. All right, everybody close their eyes so you don't see my username and my password. six asterisks in case you were wondering. So here's where we are, and you can see earnings, and the move comes tomorrow, and it's after hours. The yellow is the estimate move over the next several months based upon 10 years of seasonality. The green is 5 years of seasonality. I just set it so that everything aligns around earnings date. Let's take a look at where we've been. So we've been in a downtrend in a range bound, and we're at the upper channel in a downtrend. Now, one could say I'm cheating, and let's do this. So here, if we look back over the last month, we're in a sideways channel, and we're at the upper end of the channel. This tells me that there's a very high likelihood, and we bring data up into this, high likelihood that we break out to the upside. If we look at from January 19th to February 27th, 10 out of 10 years, it's up. Right? So that's over a little bit over a month. Average return is 31%. Pretty darn exciting. So if I'm a believer, how do I want to play this? And why is the percentage different? Because this is a longer look than I had in my prior analysis. Here's the chart. Let's go back to last year. If I remember correctly, this was a confusing earnings statement, ran up and then pulled back the same day, continued an uptrend, and then here we were last January. In a downtrend, as was the market, started to go sideways, and this was the day of earnings come out. And it had a positive day, it was up 5%, it was up 1.53%, which is $5 a share, at 336. I bought calls at the money that expired 2 days later. I think this was a Wednesday. My buddy George Lee bought calls that were 1 or 2 strikes out of the money that had a huge percentage return. So let's look at October. Here's the last earnings number. And we'll be able to find it just by looking at the chart. Here was earnings in October. Closed at 448. Opened the next day at 331 and closed at 361. So that's about an 80-point move. So this is the reason to be nervous. All right, so now we get to today. In a downtrend, kind of staying exactly where it was in the same range after the big fall off in October. You had analyst upgrades, kahunas, pocket pivots, and a mobile breakout from a squeeze on Friday. How do you want to play this? So here are my thoughts. I had a nice talk with one of my buddies on Friday, and with the market moving so much, I was afraid to put my order in because I need to know what the market does tomorrow. If the market is flat tomorrow or uptrending, and if Netflix is flat or uptrending, I'll probably do some trades late in the day tomorrow, trying to take advantage of the projected 20% move over the next couple of weeks. Those trades are likely to be at the money calls, which will be expensive, perhaps an at the money long call, and short a 3 or 4 strike price out call. If you look at the price of these calls, you'll see why it might be okay to go out of the money. Now, I don't want to go into my TD Ameritrade because I don't think I took out my personal stuff. So let me go into here. And I hardly ever use Option Station Pro. It's apparently a really good program. Let's look at Netflix, and let's look at the expiration. That's 3 days and 22 minutes left. And the stock closed at 336. So here's the at the money strike. So if you get a 20% move, it could be as much as 50 to 60 points. It's going to cost you a ridiculous $18 or $19 for 3 days of owning that. For a lot of us, that's kind of crazy. Now, what I might consider doing is not being a total pig and saying I might be willing to bet 10 bucks to make 20. So I might look at perhaps a call here, the 1665 range, and going long, and then potentially selling a 360 or maybe a 365 to lower my cost to play. So if I did that, my net cost is going to be about $9.50. And if I could get a return of $25 against my $9.50, that might be a way that I might want to play it. Now, if you think 20% gets you up to 370, 380, you could just go in and buy some of these calls. These things are extremely expensive. Or I could say, screw it, and look over on the put side and see, gee, why don't I sell some 330 puts for $14 and buy back a 300 put for $5. So what I would do is essentially create a $9 per share, risking 30. So it's not without risk, but my likelihood of being positive on selling that put spread is probably very high because of the likelihood of the market going up. I've protected my risk by buying back a put that's further out of the money, and I protected my margin account because I don't have an open-ended put there. That would be another play, just making the premium. Now, perhaps a smarter play might be to look at something simple like a 330, 320, where you'll make $4 a put versus a risk of $10 and do more of them. So I think there are a lot of plays. You could buy the stock. You can go long a call, but boy, is that expensive. You could buy a vertical call spread, which will defray some of the upside. But at the same time, reduce your cost of getting in. You could do a naked put, which is high risk, high reward, and hope the stock trades up. You could do a sell, a put spread, where you keep the premium and you have a very measured but real downside risk. There are a number of different things you could do. You could look at other strike prices. I'm not going to tell you what trade to take, except to tell you that odds are strong that the stock goes up. We've defined what that looks like, um, and you play at your own risk. And if it feels too much like gambling, you don't play it at all. Um, you know, I'm not sure I want to be long a long time because I think you've got natural resistance here at the 50. You're going to have to get through and at the 200. And if I go back a year ago, I was above the 200, but I still had to get through the 50. So I'm sure I confused all of you on this. Bottom line is, from a seasonality perspective, one would expect Netflix to go up on this week on earnings. Now, why would Netflix always have good earnings in the first quarter? It's simple. Everybody that got an iPad, iPod, smartphone, smart TV, anything that's web connected, probably got a free subscription to Netflix. And then likely many of those people will convert that free subscription to a paid subscription. When is that likely to occur? In the first quarter, because they just bought their product, so they signed up in December. That will reflect in first quarter results, and at least for signups, and that's what drives the stock. So on that note, we got a couple spots left for my meeting. I went on too long, for which I apologize. Y'all have a great weekend, great week, and let the force be with you. Good night, everybody.